What are your health insurance options if you retire before age 65? Well, here to talk with me about this is Amy Shepard from Sensible Money.
Hi, Bob. Thank you.
Great to have you here. So what do folks need to know about this topic?
Well, it's a very stressful topic for a lot of people. They get to a stage where they're ready to retire, but one of the big things holding them back is often health insurance, the cost and just the stress of, what do they do when they no longer have the option to be on their employer plan? So it's something that I work with a lot of my clients who are in that phase of life, and we really often go through two main considerations. So one of the big ones that many people are familiar with is healthcare.gov. A lot of people refer to it as the marketplace. It was created as part of the Affordable Care Act, and it gives people the opportunity to go online and shop for health insurance is really the simple way to put it. It's a great option because you can qualify for what are known as premium tax credits based on your income and your family size. So obviously not everyone qualifies, but it is a great way to get traditional health insurance that many people are familiar with all the ways it works, but have the potential to maybe have lower premiums depending on your income and your family size. So that's the first one.
Right. So there's some trade-offs with this too, right? With healthcare.gov or ACA.
There are some trade-offs like anything in life. One of the big things that a lot of people are not aware of is the ability to have premium tax credits. And so that is something we work with a lot of clients on, is just helping them figure out how to withdraw from their assets in the early years of retirement. Ideally, they have some options where we can possibly keep their income low enough to qualify them for tax credits. The trade-off is if you are doing something like that to keep your income low, have lower healthcare costs, it may prevent you from doing other things like Roth conversions. And that's, for most people, those are the things we're choosing from it is, do we take the immediate term health insurance savings, or, do we pay higher costs for healthcare now with the potential that Roth conversions maybe add more tax benefit over our lifetime? So that's one of the big trade-offs and one of the big things that we look at both ways before deciding.
Right. And some of this you have to do in advance because the premium is based on the income that you think you'll have that year, as opposed to looking at it in arrears.
It is, yes. And sometimes that can surprise people because they think income is going to be one number, and then, surprises happen. Things come up that you didn't expect, which could cause you to have to repay some of those credits that you were using throughout the year to lower your healthcare costs.
Yeah. So that's the traditional option. There's a non-traditional option.
There is. The non-traditional option is something called a health share. Many people are not familiar with them. They have been around for decades, since the 80s, but people didn't use them often because healthcare was just traditional health insurance was easier to navigate. As it has become harder to navigate and more expensive, health shares have grown in popularity. And so they are not traditional health insurance. That is the very, very, bold. They are not traditional health insurance. You need to know that. What that means is that many of them do not cover preventative care in full, like a traditional health insurance would. Many of them have clauses for pre-existing conditions, which traditional health insurance is not allowed to do any longer. And so health shares are a good option if you want to have some kind of coverage, but it's really best suited for people who are very healthy, don't have ongoing healthcare needs. I like to think of it more like catastrophe coverage, of bridging the gap of, when you retire, you go off of your employer plan, you're not age 65 yet, so you can't go on Medicare. If you're fairly healthy in that window, a health share is a really great option to use because you can get, lower cost coverage. You're just going to give up some of the traditional benefits that you get with, regular insurance.
Right. So unlike traditional health insurance, you don't have to worry about networks either. Is that correct?
It is. That's one of the benefits with the health shares, is you don't have to spend all the time figuring out if the doctors you like are going to accept your insurance. The reason for that is that most of the time the health shares, since they're not real insurance, you are considered a cash paying patient. So when you go to the doctor and they ask for your insurance, you just say, I'm self-pay. I'll pay out of pocket, and so you don't have any of those network restrictions.
Right. And these health shares, they're nationwide?
They are nationwide. As far as I know, there's more and more of them popping up, but any of the ones that I've looked into, they're available anywhere in the country. And of course, they do have, some restrictions, just like traditional health insurance does, of, what you can use it for and where it can be used. But like anything, it's important to just make sure you really understand it before you decide if it's the right option for you.
Right. And for people who are retiring pre-Medicare, there is another option. It's not a long-term one, but COBRA is certainly available as a way to maybe bridge the gap between what you have and what you may get.
COBRA is a good option. Yes, it is a great option for that temporary period, using it for as long as you can. Again, just weighing the pros and cons. COBRA is often expensive, and it can often be significantly more expensive than either of the other two options we've talked about. But depending on your healthcare needs, it might make the most sense for you to use while you can. And then if it doesn't cover the whole transition period between, when you retire and when you go on Medicare, one of these other options is another great alternative.
Yeah. So we covered a lot of ground. Anything we missed or anything that should be re-emphasized?
I think the important thing is to just always do your homework, look at what options are available, ask questions, do the research, and, make sure that you're exploring all your options before you decide. And especially if you want to retire early, don't worry too much about the healthcare, knowing that there are options. There are ways that people do it, even though it can seem a little scary, it's still doable.
Yeah. Well, Amy, I want to thank you as always for sharing your knowledge and wisdom with our readers and viewers. It's greatly appreciated.
Thanks for having me, Bob.